for July 21st, 11:35 a.m. this morning. Welcome to Canadian Mortgage Weekly live with Sam Thompson and myself, Joe Bladek. We're really excited today to get into 5 things you need to consider when negotiating the terms of your mortgage renewal on your own. Something that a lot of people love to do. And if you don't want to use a mortgage professional, let's get right into what you need to do that as we continue Mortgage Renewals Month in July. What do you think about that, Sam?
Yeah, it sounds good. Let's hop into it. It's a good topic. A lot of people like to kind of DIY things these days, and maybe if you're working from home, you've got a bit more freedom to look at your mortgage on your own terms rather than going through a professional.
Yeah, sounds good. Well, if you're working from home, it's going to be a lot easier for sure because you can probably, I don't know how you'd be able to do that actually, but let's look at the first thing that you need to do, and that is to start early. And Sam, what's the first thing you would suggest someone do when they start early there?
Yeah, of course. I mean, we chatted a little bit about, the timeline for transferring or renewing your mortgage, but it's still a big consideration because you need to give yourself ideally 3 months ahead of time. But if you do want to, process it yourself, try and look through all of these options and do these negotiating. It's good to start maybe about 4 months before to give yourself, that extra month, that extra time to review the options because there's a lot of moving pieces in transferring your mortgage, and you don't want to get stuck under the gun and feel very rushed. So giving yourself 4 months gives you time to sort everything out.
You bet, Sam. 4 months is a really good amount of time from what I'm seeing as well, because it gives you that amount of time to really go through these next few steps that we're going to be detailing together. There's quite a few steps, and let's go through them because if you don't really give yourself this amount of time, you could be stuck, and you don't want to be stuck with a situation where you need to or have to take the option that's presented to you, right? So, yeah, let's look at the next thing, and that would be to document each offer. And I'll go into this one here, and that would be to get everything from the banks, right? And then that would be to get everything in writing specifically, because a lot of the times when you call a bank or a mortgage professional that's working with the bank, they'll quote something on the phone. And a lot of times, Sam, we'll hear our clients come back to us saying they've been quoted something on the phone. But when it really comes down to it, if it's not in writing, the bank's really not obligated to give you anything. It could just be a quote on that day for the rates as of that day, as of that hour. And as we know, Sam, in our industry, that can change sometimes daily, sometimes hourly.
Yeah, absolutely. There's definitely a lot of changes. And like you're saying, a phone call quote is probably going to be much different than getting documentation or, a physical in writing offer or quote from a bank or a lender.
Yeah. And in terms of documentation, let's go into step 3 there, or the third thing to consider, and talk about a little bit about what kind of documents we're looking at here in terms of what kind of documents we need as a individual for a mortgage.
Yeah, absolutely. It's probably again one of the steps in the process that we see take quite a while, depending on the documents that are needed.
That's
But it's
right.
important to make sure that you have some clean documents, and we use clean as a term to state that it's presenting, your best case scenario. So for things like employment letters, we want to make sure that it guarantees hours or it states your salary. It doesn't say, it's a temporary position or hours could fluctuate. We want to make sure that when you have those documents prepared, they're easily accepted by the bank and they communicate what you want them to communicate rather than adding more time. Maybe the lender learns something that they don't necessarily need to learn yet. So again, making sure that those documents are together and reviewed is a big consideration at this point of the game.
Well, I'm sure that if a lender does need to know some information, they are going to find out because we always disclose everything that we need to. It's just
Yes.
when the employment letter comes in, uh, we want to make sure that if the client is a temporary employee, that they are documented as such. And if they are guaranteed hours, that they do have guaranteed hours indicated in that letter.
Mhm.
But a lot of the times, what clients don't understand is when they go to their employer will just issue a letter that states that they work full time, but there's no mention of hours
Yeah.
and there's no mention of if it's guaranteed or any of that. So it really comes down to clarity, Sam, in terms of
Mhm.
what we are looking for.
Absolutely. And having the supporting documents like pay stubs to confirm things like guaranteed hours and if that's what we're seeing reflected on the income portion.
Yeah, absolutely. Those really can also really back up what you're looking at. And then it can make your mortgage renewal process just so much easier having that up front, because a lot of the times the lenders really care about income and not
Mhm.
really about anything else. And if you don't have that income, you might not be getting that mortgage in the first place.
Absolutely.
Yeah. So number 4, this is a big one, and then we're going to go into this one in a little bit more detail here, because we really need to make sure that we're available
Mhm.
as mortgage shoppers, right? When we're looking for a mortgage, and make sure that we are uh, able to get all those offers going and find all those offers and document all those offers. So let's talk about how we are going to be available and how much time it actually takes here. And
Yeah.
yeah, go ahead, Sam.
Yeah, I mean, bankers' hours, are 9 to 5, Monday to Friday, which means, if you're hoping to speak with somebody, right then, and actually get through, not wait for a voicemail or schedule something 2 weeks from now, it's probably best to create some availability for yourself, whether that's, taking an afternoon off, just carving out some time during the day to meet up with these banks and give yourself an option to have these meetings and all these appointments with the different banks that you're looking at getting offers from.
You bet. And with those appointments, it really comes down to, like you're saying, the bank hours, just being available during these bank hours. Sometimes they're 9 to 5. Sometimes there's a bank that you're working with that is available, a little bit in the evening, but those appointments are hard to get. But a lot of these banks, they're really only taking appointments from say 9:30 to 3:30 sometimes,
Mhm.
and you really need to take time off of work. So I know you mentioned working from home earlier in this episode, and that I was thinking about that. I was like, okay, if you're working from home, you can probably jet out early or go to an appointment like that and take some time off early from work. But it does cost though, because when you head out for work, you're taking time off, and let's talk about how much that actually adds up to with the amount of time that it does take for your mortgage. And yeah, with that, let's talk about the first thing, and that's actually setting all these appointments up.
Yeah, I mean, there is quite a lot of time that it does take to schedule these appointments, to get through with the representative, to take time to schedule the meetings and checking availability with your spouse. I know that that can be, a long time just in itself. If you both are working maybe full time, you have kids, you
Yeah.
have to work out, what time works well to get that done. So that can take a number of hours, just planning for an appointment and getting all those appointments scheduled in with the different banks.
Yeah, that's so true, Sam. That can sometimes take a while. I know when I was renewing my mortgage, personal story just a little bit ago, I know that they originally contacted me, which was really great. And we set up an appointment, and it was nice and easy. And I thought, okay, this is going to be pretty good. I'm going to speak with them about my mortgage. It's going to be fantastic. Let's see what they are offering. And I can go through the same process as a customer would. The only thing is that my appointment kept getting canceled, rescheduled,
Mhm.
canceled, rescheduled, and it was really frustrating because no one really followed up after the last cancellation, and it became something that became a burden. And I noticed it quite considerably. And just having that burden where the bank's not really taking the responsibility as much as I feel they could, following up, reaching out, making it easy for me. Uh,
Mhm.
they really made it a difficult time. So that took time out of my day, and it really didn't get me any results at the end of the day because I had to kind of make a priority to make it happen on my own. So yeah, getting that first appointment, let alone appointments with number of different banks, could take, I don't know, Sam, could take maybe 2 hours between the two spouses just coordinating all that together.
Yeah, absolutely. And then even once you've had the offers, you can, easily, in most cases, tack in, another couple of hours, maybe 2 or 3, just to contemplate the different options, to set aside some time to, review the options that you were given, look through the offers, chat with your spouse again, and do some follow up and some financial planning. So that can add, another few hours as well to the process.
Yeah, exactly. When you say financial planning, do you mean like kind of working through the offers and working through what's available?
Yes, yeah, for like your own, personal
Yeah,
financial planning for your household as you're, chatting with your spouse or your significant other, and figuring out kind of where you want to be and which of the offers, suits your needs the best.
yeah, that's a good idea. So we'll set aside maybe 3 hours for that as a couple to sift through, say, 4 or 5 different offers. I know it takes us a little bit of time to communicate and calculate that for our clients. What
Hmm.
is the best offer for them based on their goals? But just between the appointment setting and looking at the offers, we also have in the middle just going to those appointments and how long that takes. So maybe each bank, let's say you go to 4 banks, each bank takes 2 hours. You're going together because they want you to both go together. And also driving and coordinating and getting gas and getting there and parking, maybe another half hour there, half hour back home, right?
Hmm.
So what's that? We're up to wait, 8 hours for those 4 appointments plus the extra 4 hours for commuting time and all that. So we're up to 12 hours just on following through on those appointments and meeting
Hmm.
with all the different professionals and getting those offers in writing. That can really add up to a lot financially when you're taking that much time off of work.
Yeah, absolutely. Like there's the cost in hours to do that. And when you look at, I think for our purposes and calculations, to give you guys a dollarized idea, we looked at a household income of approximately 100,000 per year. Dual income family, meaning together their income is, about 44.25 an hour. So it really does add up when you're counting, into the 10, 12 hours to get all of these different processes done.
It really does. Yes. Looking at that, that's a significant amount of money, Sam.
Hmm.
4450. Yeah, that was based on us looking at a household income of 100,000, right? So the two spouses taking time off. So that's that's just fantastic when you look at it like that because you can really dollarize how much time and money it's costing you as your own person to get out there and shop for your own mortgage.
Hmm.
And so we got the setting up the appointment, going to the appointments, analyzing all the appointments, and then once you pick the lender you want to go with, you also have to collect documents for that lender. Maybe you have to collect documents for all the lenders to actually get to that point too, right?
Right.
So that is an extra amount of working through things and making sure each lender has the proper documents. Each lender is going to ask for different documents. Uh, so that's some time, and I know that that takes some time for even myself. And in addition to that, there's also the going back and forth with the different banks and saying,
Hmm.
Bank A gave me this, Bank C gave me this. What can you, Bank D, give me?
Yeah.
And um, that might be a whole drawn out process while you're getting new deals in writing and analyzing them, making sure the fine print makes sense. That's a lot of work for yourself. And at the end
Hmm.
of the day, it's going to take you just so much more time to analyze all those options.
Yeah, that's right.
Yeah. So let's look at this. So if we're looking at how much time that's taking and how much it's adding up to, I think we added it up earlier, Sam. What are we looking at here?
Yeah, I think that we looked at an approximate, close to $500 when you factor in, a together basically an hourly income of $44 and change. And then, like you're saying, adding in some money for gas and parking, it could be about $500 just in hours to dollarize that time that it takes to get all those processes done.
Yeah. And that kind of brings you that same spot to where you would be if someone met up with us and started
Mm-hmm.
everything virtually and started and trusting us with their offers and putting those offers together for them. And a
Mm-hmm.
lot of the times, even if someone comes to us with their best offers, sometimes we even beat that offer very easily. So um, there's also that opportunity cost you're giving up if you're not visiting a broker and doing it all on your own. If you could have saved there as well,
Mm-hmm.
0.1%. I don't know what that would dollarize to because everyone's mortgage is different, but you can make that call to us and we can analyze that for you, right, Sam?
Yeah, that's right.
All right. So I guess the final thing we can talk about is, to get the best deal, I think someone really should deal with someone that can work with many different lenders at once,
Mm-hmm.
like a mortgage agent, mortgage broker that is licensed to deal with all the lenders and can not only plan out what your financing should be based on your goals with the lender that you're most comfortable with, but also show you other options, other ways to do things, and other uh, deals that we can use to actually get you a better offer in the end ourselves. So, what do you think about that, Sam?
Yeah, absolutely. I think, a mortgage professional is the best route to go because it does save you a lot of steps. Again, many mortgage mortgage professionals have access just to more products and different lenders, including, some, if not all of the, big five banks that you would typically walk into. So you do have a more varied option and a bit of competitiveness when you're able to chat with a mortgage professional who can look at all those offers almost at the same time, when you say, Joe.
Yeah, absolutely. All at the same
Mhm.
time, and really analyze that quickly for you, so you can make a quicker decision. Because really, when it comes down to it, you really need 4 months to go through all the steps on your own. And a
Mhm.
lot of the times, we see our clients come to us within the last 30 days of their mortgage renewal, and they're saying, "Joe, we need something. We're looking for a better offer." And by that time, it's almost too late for us, pretty much, because you're going to have a lot of work on your plate as a client if you haven't started collecting documents, contacting your employer, contacting your CRA online account to get your tax documents.
Mm,
That could be a lot in appraisals and visiting with a
yeah.
lawyer. So there's all those steps to consider when still transferring your mortgage and renewing your mortgage that really take up time at those last few weeks there.
Mhm.
With that, Sam, if anyone has any questions, contact Sam or myself to get started on renewing your mortgage today. We can save you a lot of time here on Canadian Mortgage Weekly, so we can get that going. And what we'll do is we'll get into the news now. And
Mhm.
Sam, I know that you have some really interesting news coming out today. I'm really excited to chat about some of these stats. Specifically, let's start with the bond yield that we usually start with here on Canadian Mortgage Weekly. And let's get that up on the screen. All right. So, episode 89. So, I still can't believe we're 89 episodes in. We're getting 11 away from 100. Really, really awesome to see that. Thanks
Mhm.
for all our viewers. So, let's get into the bond yield today.
Yeah, absolutely. So the bond yield currently today is it's sitting at about 3.14%. So it is down from when we last had reported it, not by much, but we can notice that even though there has been a couple peaks, a little bit of variation, it's still continuing a bit of a downward trend. I mean, I think we've noticed a tightening, at the lower 3% bound. But when you're tracking it from, where we were, maybe start of June, mid-June, close to that 3.5% mark, we have followed a downward trend line from that high peak.
We really have, Sam, and that's really refreshing to see. So much so that I'm really looking forward to possibly fixed rates coming down. I know that we were chatting in the office, Terry Lynn and myself, just this week. We were chatting about some of the lenders. They've actually started to slightly reduce their 5-year fixed rates for the first time in months. And that's just happening this week. So that could be correlating to what you're saying, Sam, here on this bond yield chart here, where we're seeing this downward trend. And banks are noticing that and slightly reducing their 5-year fixed rate. Mind you, it's a very small reduction, but it's the first reduction in months.
That's right. I mean, I think we have seen quite a pattern recently of increasing fixed rates and, them staying at a much higher rate than we were seeing during the COVID-19 pandemic. So seeing them come down is probably, like you say, very refreshing for a lot of, mortgage holders or people looking to get into the market.
You bet. Yes. So with that, we'll continue following this Canadian bond yield on Canadian Mortgage Weekly Live here. Join us next week. We'll see where this tightening range takes us then. Until then, as always, we love to talk about not only fixed rates here on Canadian Mortgage Weekly, but variable rates. And with that, we look at the CDOR rate, and we look at the variance, and we look at, is it competitive to get a fixed rate, or is it competitive to get a variable rate mortgage, or is it competitive to get both? But looking at this one, I mean, it's always good to talk to your mortgage professional, whoever you're dealing with, just to make sure your goals match with whatever you're taking as a mortgage. But in this case, Sam, I think it's looking like, variable rate mortgages are still a competitive option for those that it matches with.
Yeah, absolutely. When we're tracking the CDOR rate, it's again has gone up slightly since reporting last week, but it's still the variance is still under 2% from the prime rate. So again, we are seeing that according to this statistic and tracking that CDOR rate, it is still a good option to go with the variable rate mortgage, which may feel like a different sentiment than you've been seeing some rate hikes or, maybe things that you've been seeing in the media or articles. But according to the statistics here, it does indicate that it's still a good option and a variable option for you.
Exactly. And I'm seeing that if someone was to take a variable option today, they can actually take a variable rate mortgage where they take one where the rate either where the payment will stay the same and the amortization fluctuates, or the payment fluctuates and the amortization stays the same. So there's a few different options. And with that, there's a lot of different ways you can structure a variable rate mortgage that could benefit your lifestyle instead of taking a fixed rate. And that's always something to talk about your mortgage professional. And what I always suggest is make sure you have that conversation as to what your fixed rate payment would be now and what the worst case scenario for your variable rate payment will be. And then you can take a look at what you're paying per month and looking forward that way. But moving on. That's always more conversation than I need to get into on this show today. Is the Bank of Canada interest rate. And we did see that big announcement last week here. Sam, we had a fun time on our pre-rate show and rate announcements live here on Canadian Mortgage Weekly at our special time. We had quite a shock here as we were expecting a large increase, but not this large.
Yeah, exactly. I think we were all bought into the sentiment of a 75 basis point increase, but the Bank of Canada made quite a statement and increased it by 100 basis points, which I think, definitely shocked a lot of people and increased the overnight rate to 2.5%. So we did, again, do a coverage last week where we looked at the commentary leading up to it. We took a look at the monetary policy from the Bank of Canada rate announcement. And yeah, I think it was, definitely check out last week's coverage because we covered a lot of interesting articles chatting about, the different components and things leading up to this rate announcement.
We really did, Sam. And with this big increase, I know there's been a lot of buzz now with, what's happening with payments going forward, what's happening
Mhm.
with rates going forward. Um, and from what I've seen, there's a lot of mortgage professionals online still uh, praising the variable rate, saying that variable still maintains flexibility for our clients, and
Mhm.
variable still maintains the lower payment now versus the higher immediate fixed payment, and it also provides possible savings in the future. And I
Mhm.
know that looking back at history, the Bank of Canada's rate increase cycles have been on average about 18 months. So we're really deep into that at this point. So I
Yeah.
wonder how much longer before the rates start going down and start really benefiting the variable rate mortgage holders.
Yeah, it's a very good point. I mean, there's lots of considerations. Again, looking at it face value might have a different sentiment than, again, going with a variable rate and looking a little bit further past this year, past that, 18-month rate hike cycle where you could see those rates drop. So it's all good things to consider when looking at a variable rate.
Yeah, all good things for sure. However, always good to chat with your mortgage professional because during these times, it's
Mm.
always good to make sure also that these mortgages match with your lifestyle goals and what you need as a client. So, now the most exciting news here on today's show here is the average house price. I'm not sure where it's at. Let's reveal it for everyone. Sam, I know you have the figures. Where are we at today?
Yes, so today there's been quite a jump, or sorry, quite a drop from what we had seen in last month's average. You can see the orange line on the graph on the screen does indicate, the average sold price, and we finished off June with quite a decrease, with the average price being below 700,000 and quite a bit below 700,000. It's sitting at $665,850, which is a huge relief for a lot of prospective buyers that were looking, back in 2018, or sorry, 2018, back in February, where the price was as high as $816,000 for a average home price.
Wow, that's fantastic. I'm just looking at this chart here, and you're right. We have quite a good price point now for a lot of prospective buyers to
Mhm.
consider entering the market. Looking at these prices, I see that if this graph is correct, we're looking at prices that haven't been seen since 2021, uh,
Mhm.
early 2021 at this point. So over a year ago pricing.
Yeah, absolutely. We're definitely seeing um, houses are on sale for sure compared to where they were
Mhm.
at the start of this year in that early spring market.
And we've seen a little bit of buzz this week as clients are starting to contact us uh, in a little bit of a more urgent fashion, saying, we are looking to get started. We want to see where we are at.
Mhm.
And there's just been a little bit of an uptick in that we've seen here through the office level. And I wonder if that's to do with this people are noticing the prices have really shifted and they are seeing, wow, we can actually afford this now.
Yeah, there's been a lot of shifts in the market. As it begins to stabilize, we're seeing conditions back on offers, which I know I'm happy to see that those are back. Where there's a
Yeah,
condition on financing or home inspection, because for quite a while those were out the window. So I think buyers are also feeling like they do have a bit more security putting an offer in, knowing that they don't have to go firm, right out of the gate anymore.
you bet, that's right. And looking at what the average income now required to purchase would be, it looks like dropping for the fourth month in a row. We're down to an average household income of $150,870. Uh, No, 138,000. Is that correct, Sam? I think it is.
Yes, yeah.
Yeah, 138,000. That's a nice drop there because for a little while there, we're seeing that the minimum household income required for a first-time home buyer here, or 5% down, or minimum down payment buyer here, actually, sorry, would have been north of 170,000.
Mm-hmm.
Yeah, so that's a big consideration. It really opens up the buyer pool to quite a lot more clients. And the minimum down payment has dropped to $41,500 now based on the average sale price. So that's pretty great.
Yeah, things are definitely coming down and making it, that much easier. Definitely 41,000 is still a lot for a minimum down payment for some, starting first time buyers, but it's definitely a little more palatable than what we were seeing earlier this year.
It really is, Sam. So if you're a first-time home buyer or someone that's looking at getting into the market, really consider talking to a real estate professional. If you're looking to get connected with one, we can connect you with a real estate professional in your local market. We are based out of Simcoe County, Barrie, and Orillia area. However, we also have relationships with real estate agents all over Ontario and can connect you with one that really knows their market better than we ever would and can get you someone to talk to you about getting into the market today and what house prices are in your area. And seeing if it's something similar to what the average graph is looking like here, because I'm seeing that if you can get into the market at 2021 price, and that's pretty good.
Mm-hmm.
Yeah. So looking at this, Sam, thanks for always joining us here. I'd like to take a moment to introduce Sam Thompson. He's a mortgage agent with Mega Mortgage, part of Lend at Ease, and he's been with us for over 2.5 years now. Sam, it's great to have you on this show, and good to always have your expertise. Sam originally came from Ottawa, Ontario, and lives in Barrie with his wife and puppy here, and good to have you on today.
Yeah, thanks so much for having me. And again, providing some of your insight on the market. You're yourself living up in Orillia with your wife and 2 kids in the industry for, we're getting really, really close to that 12-year mark, which is super exciting. So you do have a lot of knowledge in the market. So thanks for having me on the episode and walking through the things to consider when you're wanting to negotiate your transfer.
Yeah, for sure. It's very much, Sam. Yeah, it's getting close to that 12-year mark for sure. I can't believe it's been that long. It seems to have gone by very quickly. As I'm sure the last little while has gone by for you with the way COVID has been and mortgages.
Yeah.
But however, looking at next week's episode, everyone get ready. We really have a special one in store for you. Always here on Canadian Mortgage Weekly Live, Canada's only video mortgage news video podcast for the Canadian homeowner. Looking at the next episode, we're going to be talking about what you can and can't do when transferring and renewing your mortgage. It's something that we get a lot of questions about, and one of those things, Sam, is like, can you take out equity when you're transferring your mortgage at that time? And I wanted to address that because that answer is both yes and no. And I want to address why that is when we get into it next week. But I'm pretty excited about it. And that will be episode 90. What do you think about that?
Yeah, episode 90 is going to be a special one that you don't want to miss. I mean, it feels wild that we're getting closer and closer to 100 episodes, but episode 90 is definitely an impressive milestone that really has gone by very fast.
Yeah, absolutely. Thanks very much, Sam. And yeah, thanks for joining us on Canadian Mortgage Weekly today, Canada's only weekly video mortgage news podcast. And thanks for watching. We'll see you next week on Thursday at 11:30.